Welcome everyone. We're going to go ahead and get started here. Today, we're reviewing the YCharts Economic Summary Deck, understanding lessons from Q4 2020 to watch in the new year. Hosting the webinar today is myself, Alison Rendleman of the Customer Success Team, and Connor Kitko, a member of our marketing team. Should you have any questions for us throughout the webinar, you can submit them on the left-hand side of your screen, and we'll be following up soon with the information you're looking for. Please note that the content of this webinar is meant for educational purposes only and is not intended to be used as investment advice, nor is YCharts acting as an advising party regarding client funds in any way. Finally, we'll post a recording of this webinar to the Support Topics page of YCharts, and we'll send out a copy to all attendees. Now I'll hand it over to Connor to get us started.
Thank you, Allison. Welcome everyone, Connor here. Today, we are reviewing YCharts Economic Summary Deck for Q4 of 2020. We publish this deck every quarter with the intention of giving YCharts users insights and resources that they can use with their own clients. And if you are a YCharts client, you can access this deck inside of the tool YCharts by clicking the Support menu, then Resources, and finally under Presentation Materials, you will find a list of the running history of these decks. And if you are attending or registered to attend this webinar, we will also be including a link to the deck in a follow-up email shortly after this airs. So the deck has two parts, and we're going to start by checking in on some broad market indicators, sectors, and other economic data. And then we'll shift our attention to some of the storylines or areas of the market that really captured everyone's attention in the last quarter. To get us started, I'm going to kick it back over to Allison for our first slide.
Thanks, Connor. So for those of you who have been using these Econ decks, this first slide and the one after should be familiar. But for those of you who are new joining us today, we have a wrap up of the stock market performance from the last quarter. I'll just point out a few of the most interesting trends from these slides. In the fourth quarter, we saw positive double-digit returns of all major US indices. We did see some volatility in October, mostly centered around election happenings in the US, but we still managed to post gains, which is encouraging as this has not been the case for previous quarters when it comes to those major market indices. On the global stage, even higher performance for emerging markets and European stocks, with EM emerging markets especially being one of the more interesting stories. When we hear talks of weakening US dollar, that usually spells out good news for EM, and we'll get more into that later. But for now, you can see those gains exemplified here in the past quarter. Quickly moving on to sectors, all 11 posted gains for this fourth quarter. Especially notable is financial and energy that have lagged for much of the year. But even with their fourth quarter gains, if you were to look at the whole year's performance, only energy, financials, and real estate were the three sectors to coop losses of the year. Using these sector ETFs as proxies, it will be interesting to watch how they perform in the new year. But that's enough of the sectors. Connor, what did we see from an individual asset classes in 2020 and in Q4 in particular?
Well, we saw a lot of dominance, Allison, from risk assets, both at the end of 2020 and actually throughout this entire long-term bull market we've been in. So looking at this asset quilt, for a few key look-back periods, we have each asset class ranked by its performance, best at the top and worst at the bottom. So across all these look-back periods, growth, small caps, emerging markets, and US equities really dominate the top of the table. If we'll move on to the next slide, which shows us the same data, but this time in a quarterly view, so every quarter going back to Q2 of 2017, what I'll call your attention to here is the performance of US value stocks. So in the ongoing debate between growth and value, growth has been outperforming for quite some time, but in this new post-COVID market, many are looking to value stocks to outperform. You'll notice at the end of Q1 2020, a nearly 27% drawdown for US value, but climbing the table ever since. And in Q4 2020, US growth still returned over 11%. However, that is a much more middle of the pack number, while US value is really shining here. So now that we've covered those asset classes, Allison, what can you tell us on the interest rate side of things?
Yeah, in this last quarter, there weren't many changes from the levels we've seen, except for long-term treasuries have risen, although still very low, especially compared to a year ago or uh, a few years ago. I think what most people are waiting for are these combined forces we have of a weakening US dollar and increased government spending that often correlate to a rise in inflation. The Fed seems committed to keeping rates low for now in efforts to encourage borrow and spending and just encourage and fight the recessionary pressures. But perhaps we'll see before the end of this year if those inflationary pressures cause them to reconsider that stance. Either way, the Fed is good about signaling forward guidance. The new Biden administration has made no hint yet if they would replace current chairman Jerome Powell, so all things look pretty steady there. It will be interesting to look at these interest rates for the quarters to come.
Yeah, and Allison, really quick, I know how popular this chart is. Can you address how users can get their hands on this yield curve chart?
Yeah, definitely. So this is a common question we get it, every time. This yield curve chart is available for all of those who have access to YCharts Professional and our Excel add-in. So we have it as an existing template that you can access just by going to the tool menu and down to our Excel library, and you'll find the yield curve template just right in there, a couple with some of our other economic templates on that page. So
Awesome.
Connor, what effect do those interest rates then play into movements for investor portfolios?
Yeah, there could be a couple ramifications, Allison, but only if some of the trends that we see on this chart here hold up or continue their reversal. So I'll explain the first potential ramification, which is that for most of 2020, fixed income was relatively ineffective at adding current income to portfolios. This is this middle of the year time when the S&P 500 dividend yield was actually higher than long-term interest rates. So once again, if you wanted current yield or current income, there were better places to look than fixed income or treasuries. So as this trend starts to reverse now in the beginning of 2021, this is potentially no longer an issue for investor portfolios, but definitely something to keep a focus on in case that trend reverses once more. Now, second is that this nominal value for the S&P 500 dividend yield, given at 1.55% at the end of the year, this is actually the lowest this figure has been since 2003. So very depressed dividend yields in the S&P 500, and this is caused by potentially two things. Number one is companies cutting dividends in response to COVID-19, which we've seen a lot of. And number two is prices running way higher since the recovery started, which we've also seen a lot of. So it's definitely important to keep an eye on dividend yields, where they stand relative to interest rates. And if you're after current income or yield in your portfolio, then the relation between these two will be very important going forward. So moving on to our next slide now, Allison, we have seen a lot of headlines of a weakening US dollar. So what can you tell us is going on here?
Yeah, as promised, here's our slide on that weakening US dollar. You can see when we compare below the dollar and its exchange rate to major currencies like the euro, the pound, Chinese yuan, and the Japanese yen. So first thing I'll address is, why is the dollar weakening? Well, in this year, the M2 money supply, that is cash and liquid deposits, grew 25%, which as far back as our data go is the largest growth in that money supply that we've seen. Adding money into the market is the Fed's tool for encouraging spending, making liquidity more available. Now, as far as its relation to EM, most currency trading has to go through the dollar, which is why as dollars are cheaper and more available, it's especially attractive to those emerging markets whose currencies don't have the same strength. Of course, on the flip side, it does make imports more expensive for the US. And you can see we have a table above here of exports and imports laid out over time, starting with the US's own and then comparing it to a couple different regions that we trade with, including Canada, Mexico, the EU, China, and OPEC. So as the weakening of the US dollar continues to be a trending story, I like to keep track of that on my own YCharts platform. So if you'll allow me a moment here, Connor, I'm just gonna pop out of this presentation and jump onto my YCharts dashboard here. You can see I already have it pulled up. On the right-hand side here, I have a chart where I'm tracking the movements of the USD compared to those same different currencies we had on that chart there. And I'll just demonstrate. So I use this new create a new chart button to build that chart. But if I wanted to change anything, I can just click on this drop down, edit my chart, and add in another currency here. So I could add the US dollar to the Japanese yen. Go ahead and save that down. And it's really nice because anytime I'm popping into YCharts, I don't have to go into a specific tool. I can just passively be keeping an eye on these exchange rates and as they trend throughout time, with the ability to make my chart a little bit more dynamic. So jumping back into the slide deck here and moving on from dollar versus foreign currencies, Connor, what do leading indicators say is in store for the US economy?
Right, Alison. This very colorful slide here looks at a few economic data points that are historically seen as predictors of upcoming economic cycles. And the latest prints that we've received on these indicators are a mixed bag at best for investors. Looking at our leftmost column, we see that the yield spread is widening, the S&P is trending up in terms of performance, and the consumer confidence is relatively high there in the middle of the table. However, business and manufacturing surveys are worsening, and housing and retail indicators are pulling back from their recent record highs, generally signaling this kind of pullback or overheating of the economy. And if we will, we hear a lot about the economy not coming back fully in force from COVID, but even in this recent recovery, there's a few question marks to be looking at about what is sustainable and what is not in each of these different areas of our economy. So definitely keeping our eyes on housing data and consumer data and market returns going forward. But speaking of these indicators, Alison, you are going to walk us through a few that are most relevant to housing.
Yeah, so following up these leading indicator slides, we have a couple slides focusing on housing in particular. Much of the housing story is similar to what we've seen in previous quarters of this year. You can see that on our first chart at the very top here, exemplified with the 30-year mortgage rate still so low compared historically. And because of that, demand for mortgages, both new and refinanced, is still very strong, which you can see below of US mortgage originations and US mortgage originations refinanced. In the next slide, we see what that demand for housing has done to the supply. Looking at my top chart here, the US existing home month supply is well below its long-term average over the past 20 years. But as the data from the previous slides show, housing starts and permits are up this past quarter, following a general rise. So we should hopefully see that supply trend up to meet its demand. So Connor, housing seems pretty short up. Can you tell us what other parts of the economy are still lagging from this chart here?
Right, Allison. So this chart shows us that a few areas of the economy, namely employment, GDP, and personal income, are not bouncing back quite as strong as things like the stock market or housing. Allison, if you could jump into YCharts here, let's actually demonstrate how to build this chart because it's a good one for communicating about this recovery with clients. Looking at this view inside of fundamental charts, much more disorganized than what we just saw on our slide. But Allison, using the left panel here, could you please go to data format and then select % off high? So what this percent off high data format does is that looking at each of these series, whenever we're up near that 0% or that flat horizontal line range, it means that these indicators are reaching or setting new highs. And then obviously when they draw down from those recent highs, that's where we see these dips on the chart. So Alison, could you actually do one more addition, and under the annotations tab, let's add a minimum annotation for the S&P 500. So when Alison adds, among the many options of ways to annotate a chart, she adds this minimum line, and now our chart shows us exactly how much the S&P drew down back in March and April of 2020. Looking at this chart, we see more context about the different areas of the economy and their performance, some that have come back strongly and some that maybe are not coming back fully even in the next couple quarters or so. Definitely we'll be watching moving forward. Alison, in our next slide, can you please tell us about the employment situation?
Yeah, so jumping just right back in our deck here, I think this slide is a reminder of how devastating COVID was and continues to be. The new claims for unemployment, which you see here on our slide on US initial claims for unemployment insurance, are nowhere near the highs from earlier this year, but they are still magnitudes above recent historical values. And not to go without mentioning the number of people who are still underemployed, which if you look here, the US U6 unemployment rate helps us capture, which includes those who are employed but are on part-time work when they rather be fully employed. And that's at an 11.7% compared to the regular unemployment rate of 6.7%. This slide helps us put into context just how much further the US economy, uncoupled from the successes or gains of the stock market, have to go in terms of recovery. And now moving right along, Connor, can you tell us about the performance of some diversified portfolios?
Yes, Alison. So this chart is a great demonstrative that just looks at a few different allocation-based portfolios. So you'll see there in purple, we have an aggressive portfolio, a balanced portfolio in orange, a conservatively allocated portfolio in blue, and then finally just regular old S&P 500 in green. If you upload your model portfolios and you use YCharts to manage those model portfolios, this is a great visual to share with clients and demonstrating the benefits and the drawbacks of diversification or different allocated strategies. So it does a great job of showing over time both the benefits to the upside and the protection to the downside of different kinds of portfolios. And we find this is a chart that a lot of clients like to revisit to monitor their portfolios quarter over quarter, year over year. On the next slide, Alison is going to talk about trends in US consumerism.
Yeah, so on the left, we have retail sales both in aggregate and month over month. This chart illustrates the jump that retail sales took last year, but we continue to trend upward. And in fact, if you were to draw just a trend line along this purple line of our chart here, you see we're about the same rate of pre-pandemic levels for retail spending. And I would say most of us now are very experienced with online shopping, wouldn't you say, Connor?
Yes, at this point, very experienced.
All right, yeah. And of course, the pandemic caused a massive reversal of personal spending versus saving, which you can see on the right-hand side here. A trend that has since corrected itself to typical relations, but is not yet at the rates that we saw in those pre-pandemic levels. So I think these charts are both worth revisiting in the quarters to come to see how those trends continue and if they stay in line. Speaking of spending, Connor, can you tell us how the US government has been spending lately?
Yes, Alison, we read a lot about stimulus spending in 2020. Nearly every headline was focusing on what stimulus package was or wasn't being passed in that given month. Now that 2020 is over, we can finally see in the data everything that the US government did or attempted to do to support the economy and support Americans. So the public debt is a number that was always followed or drew a lot of scrutiny even before COVID. But on this left-hand chart here in the middle panel, we really see this US public debt shoot up in that quarter in the middle of 2020. Looking in the chart on the right, where the blue outline is shown, the US public debt year over year percent change, we see how much this latest spurt of spending, a 72.5% increase year over year. And this is just definitely something to watch with a new administration and new makeup of all of our representatives in Washington. Will public debt be a priority? Will there be anything done to address this? Or is public debt just going to continue running away as it has, and it's kind of the necessary evil in order to pull us fully out of the effects of COVID-19? Definitely something to watch and be mindful of in the macro economy. And Alison, you're going to tell us what we're seeing on US income and taxes.
Yes, so this chart is showing that personal income and taxes have been growing steady, pretty much in tandem, till this past year, of course. And we see a slight dip in both right after March, but personal income rises again. This can be in part of our national stimulus checks many of us received, but also bear in mind that many of those who were out of work and are still out of work due to the effects of the pandemic are those in the service industry and lower wage job levels. So with higher wages, we continue to have income and could attribute to the reason that the personal income was able to jump up so quickly after that dip. And of course, keeping in mind with the US personal taxes did lag due to the government delaying taxes. If we remember, we all got an additional tax break of extending that typical April 15th deadline earlier this year. But by Q4, the disruption in this trend is reversing and the gap is starting to close in.
Hey, Alison, I think one really cool thing about this chart is that you're showing indicators in this top panel, but then a ratio between the two in the bottom. So can you show us a quick demonstration of how to make something like this in YCharts?
Yeah, definitely. So popping out of this presentation, and let's just jump back on that first fundamental chart we had. I'm going to go up to the right-hand corner and just reset things. And I'll jump over to my control panel and just show you exactly how we can recreate this chart on YCharts. So first I'll add our indicators. You can just search them exactly by the name title that they have on the presentation. So US personal income, the second one there, and then US personal current taxes. Now we're seeing both of those indicators on the chart. I believe we're on a 3-year time frame, and actually that data was normalized. But the second part that I really like about the chart is what you were pointing out there, Connor, is the ratio. So if I scroll down on my control panel here, we have a ratio spreads and correlations button just right at the bottom here, and I'm going to go ahead and create that now. Just adding back in those security types so you know exactly what to build the ratio out of. US personal income, and on the bottom there, I'm going to add US personal current taxes. And if I submit that, then there we go. We have a replication of that chart just here on YCharts. You can see the two metrics as they relate to each other above and exactly how that ratio breaks down below. So you can really see exemplified how they took a divergence right there in April of 2020. If I wanted to then take this from YCharts and share it with someone, I can flip it on to presentation view. You're going to see my logo appear in the lower left-hand corner. I have a chart option drop down where I can show my customized colors. If you don't have customized colors set up on your account, do reach out to your account manager and we're happy to set that up for you. So it always lives there, and I now have a much more personalized version of this chart that I can now share by using the share drop down to either share it with my team, or I can export it by downloading it as an image. And it's going to pop up as a PNG file right there for us.
Very cool.
All right. And jumping back into our presentation, here's a fun one and one of my favorites. Connor, can you tell us about the best performing stocks of 2020?
Yes, this is also a favorite of mine and a favorite of our advisors using YCharts and our friends Michael Batnick and Ben Carlson, who host the popular Animal Spirits podcast from Ritholtz Wealth Management. They talked about this on a recent podcast episode as well. And what they drew out of it was this developing trend in 2020 of what they called micro bubbles. So we see these very small secular names or industries within sectors rising like crazy throughout the year. And this is evidenced by the fact that most names on this list are small or micro cap stocks that I've never heard of, we've never heard of. Names looking in the top center table here, the very popular high flying technology sector, you wouldn't expect a name like Veritone, ticker VERI, to have number one, led the tech sector in 2020, and number two, it returned over 1,000% on the year. So this chart, there's a couple things you could take away from this micro bubble conversation, and one of them is that there's a lot of opportunity left in the market among these small caps or mid caps. And the second, to the opposite effect, would be we're seeing a lot of risk-seeking, highly speculative behavior. And this is evidenced by other things we've seen, like GameStop and Bitcoin. Are these small names really rising to the top meteorically? Is this healthy? Is this opportunity? Is this risky? All things that we'll see, hopefully, a clearer picture of this year in 2021. Speaking of that speculative behavior, on our last slide, we have included some topical data on trends that we're seeing in cryptocurrencies, Alison.
That's right. So we saw a huge increase in value for Bitcoin and Ethereum, which you can see in their price changes here on this upper left-hand chart and in their market cap below. Their combined market caps would rank them easily in the top 10 of the S&P 500 if crypto was included. And also, what I'll point out on the upper right-hand side here, and what I think is interesting, is that there are even those crypto ETFs. So for the more traditional investor who might not mirror that crypto enthusiasm, but rather expose themselves through more traditional products, we continue to see massive rises in their AUM, as exemplified by these orange lines that have just really taken off in the end of this year. So as we bring this to a close, there's a lot of speculative activity going on with these fringe bubbles, and some are concerned, worry that these kind of bubbles spell out danger. I know we'll all be paying close attention to crypto, GameStop, AMC, and other such securities in this year. And with that, I'll go ahead and hand it back to Connor to wrap things up for us.
Awesome. Thank you, Allison. And thank you all so much for joining us today. We hope that you enjoyed this recap of our economic summary deck and that you learned a thing or two along the way. As a reminder, you can access this deck through YCharts via the support dropdown in our presentation materials section. We'll also be emailing out a copy of the deck to everyone who attended today. Thank you all again, and we'll see you next quarter.
Thanks, Connor. And thanks again for those of you who joined us today. We will be making a recording of this webinar available in the support topics section of YCharts, as well as sending a copy to all attendees, in case you need to review anything we talked about today or to share with your colleagues. We always appreciate any feedback that you might have. If you are new to YCharts and you would like to know more about gaining access or access this Econ deck, feel free to reach out to us at hello@ycharts.com. Thanks again.